Welcome back to my YouTube channel. Today I am bringing to you a mid-sized company under company corner. The company name is APCOTEX Industries. APCOTEX Industry was a division of Asian Paints. 1980 it got spun off and started a separate company under the leadership of ex-MD of Asian Paints, Mr. Atul Choksi. The company is primarily a supplier to Asian Paints and many more companies. So let us revisit this company and evaluate whether it's a good time to enter this company. If you are holding the share, should you hold or go on adding on decline, or should you exit out of the share? So before I proceed, investing in the share is a risky affair. Before investing, you must do your own studies or consult your investment advisor. Purpose of this video is purely educational. So, APCOTEX Industries. If you look at this company, there are two primary products, the synthetic rubber and synthetic latex. And they are key players in this area. They do a variety of items under synthetic rubber and synthetic latex, and they do distribute to different companies in India and also outside. If you look at the clientele, they have got a key clientele, like top ranking company as a clientele like ITC, JK Paper, Pidilite, MRF, SRF, Century, Enka, etc., including Asian Paints. And synthetic latex really is almost 56% of the revenue, and synthetic rubber is around 44%, or maybe you can say almost 50-50. If you really, in terms of export, if you look at, this is about 69% domestic and like 31% export. So in terms of even export also, it is a well-balanced company, and otherwise also it's a balanced company. But due to crude price variation or the high crude price, companies shall be facing some headwind. So today when you look at market cap is around 2,200 crores. It's a small cap from that perspective. Current price is, today price is 433. ROE is 28%. Sales have grown for more than 15% in both 3 years and 5 years time frame. Profit also have grown more than 25%, like 28% and 35% in 5 years time frame. Debt equity ratio is quite low, and the company generates free cash flow. Another very interesting aspect is this company has a PEG ratio of 0.56. Normally we say that less than 1 PEG ratio means good investment opportunity. So that's the brief of this company. Let me take you through the deep analysis of this company. If you look at this company for 10 years, the EPS has got an upward trending curve. Like with some fluctuation, except the COVID period, EPS has been growing and at a faster pace. Similarly, sales also has been growing, and OPM has grown from 10% to about 15-16% over this period. When you look at the cash from operating activity and cost from investing activity, their sum are most of the time positive except 1 or 2 years. So that also is a positive sign. As you know, company management is very good because it's a spin-off company from Asian Paints, and people from Asian Paints are on the board. Looking at the ratios, cash conversion cycle earlier used to be in 60s, now it is 54 days. That itself is a good symbol. Except 1 year during 20, which was a COVID time, it has gone up, but again it is at about 54 days. When you do the peer comparison, the company is placed very well compared to its peers, like in terms of ROC, ROE, and sales growth and profit growth, etc. And in terms of pricing, the attractiveness is trading around 19.41. Maybe for a small cap this could be little high, but still, when you look at the historical numbers of this company, that will appear quite good. So when you look at the EPS growth, about 20% EPS has grown over the years. What I have done is I have taken 2 years moving average and then computed this EPS growth rate. So if I take this growth rate and project the EPS after 10 years, taking the current EPS, it should be around 120 rupees. And P of 20 will give it a price of 2360. Today price is 433. So you will get around 18 plus percentage CAGR if you stock invest in this price, as per the calculation. As per Patrosky score is about 7, which is indication of very good financial numbers, very good, strong financial. When you look at the attractiveness of this company, see the curve over here is upward trending curve. But the fluctuations are more, like COVID period it has come down, again it took the high of around 650 or so, and now today it is trading at about 433. Of late, let us go and look at the attractiveness of this company. So the company is good from the perspective of upward trending curve, but we'll go and then look at the attractiveness of this company. So when you look at the 5 years P ratio, it is 5 years P is below the median. Similarly, 3 years P is also quite below the median. 1 year is also quite below the median. When you look at the book value, only one parameter, price to book, 5 years is higher than the median. And both 3 years, let's look at 3 years, this is slightly lower than the median, and 1 year also is quite lower than the median. This means when you look at the attractiveness of this company, the company, if I summarize like this, company appears quite attractive. Out of 6 valuation parameters, on 5 it is low, and only 1 PB for 5 years it is little high. So from that perspective, going purely with numbers and analysis, it appears that if one takes a call in this company and invest, it could be attractive. Now when you look at the all-time high, it was 651. Today it is 433. So you have got a discount of around 33.5% compared to all-time high of this company. Now let us move forward. Look at some of the brokers' recommendations. Of late, mid of 22, sometime in 6 June, Anand Rathi and others, they had done the research, and that time the projected price was 772. Of late, no brokers' recommendations have come on this particular company. In terms of FII and DII, they don't seem to have a lot of holding in this company. In fact, if you take their holding together, it will be around 2%, little less than 2%. So then, friends, looking at all this aspect, it's a strong management, very professional board, highest ever financial in December 2 quarter, inventory losses due to sharp decline in raw material prices. In the current quarter, December quarter, there was some sort of like lesser profit, and that too is due to headwind coming on the raw material, because I mentioned to you the crude prices, as you know, has been fluctuating, and this company must have stocked earlier, so there was a loss they had to take on that. In Forbes Asia, best under 1 billion category, this company appears in the Forbes Asia under 1 billion category, which is certainly the feather in the cap. And company is facing a headwind, as I mentioned to you. So, looking at the last 2 days fall, it appears that price might fall, but I would like to accumulate this share at declines. And when I accumulate the shares, the perspective is 5 years plus perspective. Like if I look from the perspective of 5 plus years, certainly appears a good company to go for, and it will give a good return. But as I mentioned to you, please do your own analysis, then draw your own conclusion. I have presented certain facts. You may like to look at it from different perspective and add some more angle and then take a call. Friends, if you like this video, please do circulate in your peer group, to your friends, colleagues, using WhatsApp, Facebook, and do give your comments. Like the video. If you are not subscribed to the channel, please do subscribe to the channel. Thank you so much for your time, and see you in the next video.